What's going on, traders? Connor back at you with another great video when it comes to trading the stock market. So a really big problem that a lot of traders will have is being able to understand the direction in which any given stock is going to move next, right? So you can really break down how a stock trades in really two ways. There's one of two ways that a stock trades, obviously up or down, but what I'm getting at here is there is a way that stocks trade, and there's one of two ways. Either they're going through an expansion phase, up or down, or they're consolidating. Okay? So think about this. There's only two ways a stock trades: an expansion, where most of the profit making takes place, and then a consolidation mode, where most of the indecisive trading takes place or share accumulation takes place. And I'm going to show you this. And the reason I'm showing you this video is to give you guys a better understanding of how essentially you can become a better trader. So right now on the screen we have the SPY, the ETF that follows the overall market and which is actually starting to tank, which makes me want to take a position potentially. I'll wait. It's just starting a downtick. So what we're going to do is we're actually going to take a look at maybe yesterday's trading or the day before. So I'm going to move this to a 5-day chart on a 1-minute time frame. 5 days. Let me move this guy. Oh, come on. All right, 5 days, 1 minute. Okay. Now we're going to start going through this together, right? So let's just go to, we'll use yesterday's trading as an example. And when I say that stock has or trades one of two ways, which is either an expansion or a consolidation mode, it does just that. It either trades in a move up, a move down, or in a consolidation pattern. So I'm going to map this all out, right? Here's our move up. Then we go through consolidation, choppy trading. This is where you don't want to be trading. Then we go to our next move up, and you'll start recognizing the pattern, right? Trend breaks. Now we go to a leg down. Okay, trend breaks here. We go on a leg up. And we're going to go through the whole stock just like this from yesterday's trading. Then we break trend once again, and then we have a nice leg down. What do you know? What happens? Trend breaks. We have a choppy leg up. This is more of a choppy consolidating trade up. Trend breaks. Now we have a leg down. And then trend breaks again. We have a leg up. All right. So basically we've been doing a bunch of legs. Oh, here we go. A consolidation mode. Consolidation before a breakout to the upside. Then we go through some more choppy consolidating. Ready? Trend up. Trend break again. Now we move up. Okay, so basically, now let's zoom out. And it helps you see that a stock trades in one of two ways. It either goes through an expansion area where most of the people make their money, or it goes through a consolidation phase. The idea here is obviously not to trade the consolidation phase, but the expansion phase. So what I recommend that a lot of you traders do is start doing this on your free time during your trading days, is drawing out your trend lines, drawing out the legs of the expansion where most of the money is made, and then mapping out your consolidation areas. Okay? Every time a stock consolidates, it's consolidating because there are bullish traders and there are bearish traders, people selling, people buying, people shorting, people covering, which is causing that back and forth trading, indecisive trading. A lot of traders don't know exactly which way the market's going to go, and that's when you get chopped out, stop losses get hit, and you end up losing money. Okay? The consolidation mode always happens before a leg up or a leg down. So as a trader, you need to learn how to spot the consolidation modes. That way you can prepare for the next breakdown or the next break up. Okay, so let's go back like another day. We're going to go over to another day, right? So let me explain this in a little bit more detail. Again, so like I said, stocks trade one of two ways. Expansion, which is when they move up, or down, that's where you make your money. and then they usually have some type of consolidation mode that happens after a leg down or a leg up, okay? Now, many of you go, well, you can't just trade this way or that way because there's bearish patterns, there's bullish patterns, so you may be thinking that it's going to go long when it goes short. Obviously, of course, there's bearish patterns and there's bullish patterns, but let me tell you this. In trading, there is not any single pattern that ever happens in a move, an expansion move, okay? So you're not going to find an ascending triangle. You're not going to find a descending triangle. You're not going to find a flat top breakout. You're not going to find a U-shaped breakout. You won't find a cup and handle pattern. You won't find a reverse and head and shoulders pattern, okay? You will not find any bearish or any bullish pattern in an expansion. And the expansion's the move, the big move, okay? Because the big move goes either up or it goes down in one direction. Sure, there may be little pullbacks here and there, but it only goes up or down in one direction. It's not until the directional move stops that we go into a consolidation period where we're not sure if we want to go up or down. That's when you'll start to see the patterns, okay? Descending, ascending, bull flags, bear flags, all those patterns happen after an expansion move, okay? And the expansion move will happen, then the stock will consolidate. It may go completely sideways and consolidate. It may chop back and forth. It may put in higher lows, and then it might start turning into a bearish or a bullish pattern. And that's where you have to recognize your entry and your opportunity to take hold of. So let's do this again, right? We'll zoom in a little bit here. So again, like I said, stocks trade only one of two ways. An expansion that can either take place going up or down, and then a consolidation mode. Ready? Here we go. And the expansions only take place after a trend has changed or a breakout of the trend that was just happening changes, okay? So like right here, we have our move down. Now it may not be the cleanest move down, but it is. What happens when the trend breaks? We go long, okay? Trend breaks again, we can go short. Trend breaks again, you go long, okay? And then here becomes a consolidation mode. Okay, we didn't just really go down, we kind of chopped around. So we'd call this a consolidation area. Something to notice when you're going through consolidations, does it look like it's trending up or does it look like it's trending down? To know if it's trending down, you're gonna look at these points and go, that's our first high. That's a lower high, followed by another lower high. So technically you are starting to downtrend, right? But you almost have a flat bottom right here. So this is where you're looking for the breakdown below the support. Where does the trend start really changing? We break down here, but just briefly to chop around. That's the breakdown, okay? Let me zoom out here. Okay, so then what happens after the breakdown? Like I said, you always go from expansion to a consolidation. You may go from expansion to expansion because the trend breaks and people trade the trend, but you also may go from expansion to consolidation of indecision on which way we should go, and then it breaks down again, right? So breakdown. What happens? The trend changes, but into a choppy trend change. And there's nothing you can do about the choppiness. That just happens, right? Then you get the trend break right here. There the trend breaks again. But what happens here is we go into a sideways consolidation, indecisive trading. Not sure if you want to go up, not sure if you want to go down, okay? Sure, we break down right here briefly before getting squeezed. So yeah, you could say, say you shorted here, right? Let's say you did take a short there. Good entry, not bad. You get squeezed. There's nothing you can do about it. It just happens. That's the nature of trading. You're going to be wrong, okay? So let's just keep going, right? Now we have an expansion leg up. Here's a good one. Big move up, big expansion. What follows next? What do you think comes? Consolidation mode. This is where we don't trade. Consolidation, okay? This is where we really don't want to be trading because you can get fooled out. You think you're going to break out, then you come down. And you're like, oh, and then you get stopped out. Starts going green, you're like, oh, this is the one. You get stopped out again, right? Not a good time to be trading, very challenging, right? You can always wait for the breakdown. Right? So you start seeing the breakdown appear, and then what happens? We go to a leg down. Okay, what happens? Leg down, trend changes, we go into a choppy consolidation where we have resistance points here. 1, 2, 3. Support points right down here. Right? 1, 2, 3, except this one is a little higher than this one, so technically have a higher low in there as well. Breakout, boom, expansion leg up. All right, trend breaks once again. Then we have an expansion leg down. Trend breaks, expansion leg up. Okay, so enough of the drawings and all that stuff, right? But when you put it that way, it becomes kind of simple. It can only trade, it can trade either up, it can trade down, but it's all going to happen after an expansion or a consolidation. So that, as a trader, is what you have to understand, that stocks trade in one of two ways: expansion and contraction. A stock could chop around all day and not really give you any opportunities, but what we're looking for as technical trader is the trend change, consolidation, and understanding of which way the trend will then break down or form. Okay? Like I said, you will never find a bearish or bullish pattern, bull flags, pennants, ascending, descending triangles, flat top breakouts, U-shape, cup and handle, head and shoulders, reverse head and shoulders. You'll never find any of those patterns. Not a single pattern that I just mentioned will you ever find when a stock is expanding. Never. The only time you'll find that is when a stock does this. It goes into a consolidation mode, or it goes into a consolidation mode. That's when the patterns will happen. That's when patterns occur. Actually, let me show you ZSAN here. Hold on one second. Let me get my old drawings off of here. Okay. So let's use this one for example. Or actually, there's a pretty good one on ECYT, I think. Right, where'd it go? Not this one. Kind of right here, right? This kind of had like an ascending triangle flat top breakout occur in a consolidation, right? So this was the expansion. That was the expansion move. Then we pull back, right? And now we start going into a consolidation mode where we go back and forth, up, down. We're not quite sure, right? But you end up getting basically a flat top breakout, little ascending triangle breakout right here, where we're getting higher lows, stocks trending up, yet we're not breaking out, and then eventually pop, pop, right? That was the expansion after the breakout, and then the run, and there was like a little mini, you could call it a little mini pennant or a little mini bull flag pattern right there, okay? So like I said, these bullish and these bearish patterns that a lot of traders are like, this is the best pattern you have to look for, this is how you find the breakout. Know that the breakout is only coming after an expansion, okay? After an expansion, and the stock goes into a consolidation mode. That's where you're going to find these bullish and bearish patterns. So something you guys need to start doing and working on and honing in on your skill set is to understand the trend. Where are we expanding? Where are we consolidating? And that will help you start to know where you should be looking for the bullish and the bearish patterns. Okay? Something I will note, and I'll go back and we'll look at, what was the one I was, ZSAN was one, right? I think this, we'll talk about this, right? So expansion here, then we break trend, so we break the trend and now we start heading down, but we only pull down to go into a consolidation mode right here. Choppy trading, not easy to trade, very hard to trade. Still really consolidating through this moment until we kind of break up a little bit. So this is just choppy trading, right? You'll get chopped out if you start trading this. And now people go, oh, well, how do I know if it's going to be choppy or not? You don't. You really don't. That's why you have to play the trend and the breakdowns correctly with your entry. See, if you got in here when the trend started changing and breaking down, you'd still have a little wiggle room to get stopped out. So even through all this choppy consolidating, if you took a short, let's say you shorted here, and you go into this choppy consolidation, you still have a little wiggle room. But if you get in right here, right, now you're getting nervous once the spread starts popping back up and the stock starts popping back up. So that's why your entries are so important, because if you have a really good entry, when trend starts to change, you give yourself that extra breathing room if the stock, if the trade doesn't just immediately go in your favor, okay? Most trades as a day trader should go in your favor almost 100, let me repeat that. As a day trader, when you take a position, if your trade doesn't go in your favor almost immediately, your entry was wrong, okay? Again, if your trade doesn't go in your favor almost immediately, you're wrong about your trade almost 90% of the time, okay? So then as we follow this up, what ends up happening, right? So We pop up, look what happens. The stock goes into a consolidation mode, right? Some people will call this a flat top breakout. Some may call it an ascending triangle breakout, right? But that's where we find our next entry, which is right here on this breakup, right? We pop up, we pull back, we pop up, we pull back, we pop up, we pull back. We pulled back 1, 2, 3 times. Each time we pulled back, the pullbacks were getting bought up and the stock was moving back up to eventually break out. Okay, so there's a lot to learn, and that's why I made this video, is to help you guys understand the expansion and consolidation zones and areas. So I hope you guys like the video. Let me know what you think in the comment section below. And always, as always, stay green.